Lake? I would imagine not, but
No, no. Both I had a flight from Houston to Denver, and it was pretty full, and the flight to Salt Lake was pretty full.
oh yeah, I would imagine that the flights aren't as full
Yeah.
because of what's going on. But was the airport busy in general? Or?
No, no, not really. They're shrinking schedules, so you don't have a whole lot of options to get
I see.
anywhere.
I see. We
So,
had our first Disney trip planned out this past April, and that was canceled. That was a bummer. We were
where are we
excited.
going?
We were going to Disney. It was
Yeah,
first time we were going to take the kids to Disney.
bummer.
And my Mary had been like listening to podcasts for I would say about like 8 months, trying to figure out how the whole Disney thing, how the tricks of the trade and this and that.
Yeah.
And then she had planned it all out. We had got all the rooms and days we needed for all the parks. And then this goes on and we're like, oh man, that's sad.
Yeah. I know. My oldest lives in Denver, and my youngest lives in Newport, Rhode Island.
Oh, wow. Okay.
Yeah.
How old are they?
Yeah. 29 and 26.
Oh, they're grown up already.
Yeah, they are.
Yeah, yeah.
I earned this lack of hair, this shiny dome. I earned it.
I'm getting there too, man. I think as my daughters get older, man, it's like, oh
Yeah.
my God. They tell me the horror stories about the girls being in the teenage years, and I'm like, oh, I can't wait,
Yeah, it's not that bad.
I'm trying to. I keep thinking to myself, like, my kids are cool. My kids are, they're not gonna give me any trouble. They're good kids,
Yeah.
I'm really not worried. But
Well, you met my wife. She's a longtime educator, and so she's very versed in that. And she always had a good saying, which I thought was appropriate. She said, the kids, they're kind of like the solar system. When they get to a certain age, they'll spin far away from you for a little bit, but then they always come back.
Yeah.
So
isn't that the circle of life? Like, okay, they're
Yeah.
with you when they're young, and then they get older. They're like, oh, we don't need you. We don't need to see you. But then they get older and they realize, they need to be around you. They didn't appreciate you, or now they're back around you. For sure.
I see Dan Mack.
Hey, how you
Hey.
doing? How you doing?
Good,
How
you?
doing?
Good. Are you at the house?
No, I actually at a Marriott hotel in Salt Lake City, Utah.
Oh, stop it. So you're
Yeah.
already out and about. Well, good for you. Is that for fun?
No, the business trip.
Oh, okay. All right. So no Nan in the background anywhere.
No Nan in the background. No, just.
How does it feel? How does it feel to be out and about?
It was okay. I flew in today, had a connection from Houston to Denver, then Denver here, and the flights were pretty full. Everybody's wearing a mask. Flight attendants don't get up much, but that's okay. But the airports are kind of still pretty empty.
Sure.
Yeah.
I went online yesterday to look for a quick flight, a little bit more of a regional area, and the airport itself is not accepting flights until July. And I was
Really?
like, oh my gosh, yeah. I thought that was just crazy. Like, the
Wow.
fact that it's still, in some areas, it's still like that.
Yeah. It's kind of weird walking through the airports. Like a lot of the Houston airport has a lot of these open bar areas, instead of restaurants, they're out in the middle, they're out in the concourse, and a bunch of them, they got it wrapped up in cellophane. Like, I guess they just don't want you to sit there if it's not going to be open, but it was kind of weird.
Yeah. I know. Yeah. It's one of those things I think about all the time. I miss traveling so much. I can't wait to get back out there for sure.
Yeah.
I told my friends, I said, you better save up your money now, because 2021, we're going to have 2 summers. So there's going to be a lot of stuff to do in 2021 for sure to catch up.
Yeah, this year was supposed to be like the year of concert. Nan and I, we were going to go to Earth, Wind, and Fire last weekend in Vegas. That got canceled.
Yeah.
What else got canceled? Rolling Stones is later this month in the Dallas area. That's canceled.
Boy.
Journey and the Pretenders in September and north of Houston. That's canceled. So.
Yeah, it's definitely not the same if you're just looking at it from your backyard, or, you know what I mean? It's got a little screen up in the backyard, and
that's right.
Split up for night, but no, it's definitely not. We're on our way. It's a good sign. It's good to see that you're traveling.
That's right. Yeah.
So, I'm sorry I was a little late on here. Really happy that you are joining us today. You can't wait to hear about Manhattan life. about that great affordable choice program, which is always on the buzz, the tip of everybody's tongue. Everybody I talk to, Manhattan is always out there, and I love it. I love the fact that Manhattan is so adaptable and versatile and able to meet the needs of the client. You guys are always staying ahead of the curve. So yeah, we're excited. And thank you. My goodness, thank you for being here and sharing this.
Our CEO, he kind of helps that flexible and agile mindset. It starts with him.
Todd, let me start off by asking you this. Well, you know, when I pick partnerships or people I want to work with, it's because I have this personal relationship with them. I get to know them, and I vibe and just have a good feeling about them, you know.
Mm-hmm.
And I want people that see this video, I want them to have that same feeling about you, the same feeling that we have about you, right? So can you first start off telling us a little bit about yourself, how you got into the insurance world, how you became, you know, the senior vice president at Manhattan Life? Can you tell us a little bit about?
Sure. Yeah, it's kind of a funny story. I started out working in the marketing department for Hasbro Games Group. You might be familiar with Hasbro. Another familiar name is Milton Bradley, the game company.
Of course, yeah.
And then an affiliate of Hasbro was also Parker Brothers. So that's kind of where I started to get interested in marketing, and had absolutely zero interest in insurance. My wife and I, Nan, we've been married now 31 years. We met in college, so we got married in 89, I guess it was. And we started out in a small neighborhood in Springfield, Massachusetts, and a guy down the street from me worked for Phoenix Home Life, an insurance company that was across the border in Connecticut. So he called me and said, "Hey, we have a marketing job open here at Phoenix. Why don't you?" I said, his name was Vince. We called him Vinny. I said, "Vinny, I have no interest in the insurance." Basically hung up on him. But he only lived 3 doors down, so I'd see him every day. He called me back about 3 months later, and he said, "We still have that job open. You ought to do that. You ought to at least interview." And I thought, you're right. And the reason that I said you're right this time was we had just had our second daughter. So now I had another mouth to feed. And I went into it with the intention of, if they offer me a little bit more money, I'm taking it. I don't know anything about insurance other than I pay a monthly premium either for my car or get it deducted through work. And they offered me the job, and that was about 21 years ago. And it's just been great ever since. You talked about partnership and relationship. Early on, one of my first bosses, his name was Joel Sanders. He's a regional vice president. He's since retired, but he gave me some very early advice. And what he said was, this is a business that's all about relationships. And when I first heard that, just new to the business, I'm sure I nodded my head and pretended I knew what he meant. But he's exactly right. It really is all about relationships. And it's really an industry that once you get in and get enmeshed in it, you don't want to get out because you do have partnerships, you do have relationships. And we see each other at all these various industry events, and really you pick up where you left off. It's like seeing an old friend from high school, right? That's kind of who we are in the industry here.
Go ahead. I'm sorry, Dan.
I was just going to say, it's a great point about this industry is that right when you think you're like, because sometimes you do and you're like, I don't know, man, or it just keeps getting better and better. There's always something new that's always the next carrot or whatever that's usually dangling. You're like, okay, I got this one. And so the next one's right in front of you too. And it just continues to propel you forward and continues. It really is an industry where once you're in, you're in. It's hard to get out for sure.
Yeah. I enjoy it. It's been good for us. And, made the move to Manhattan about 10 years ago. And that's really been kind of the highlight of my career. With our chairman, David Harris, he's just a great guy to work for, and it's a great company to work for.
When they gave you the title of like marketing officer, I love marketing because I think I'm almost certain that every business is about marketing. Like, it doesn't matter if you got the best tacos in the city. If you're not marketing those tacos in some way, no one's going to come eat those tacos, right? So
right.
What did your job entail at that first company where you were the marketer or whatever that title was? What did you have to do for them? Was it about recruiting, or marketing the plans? What exactly were you doing for them?
Kind of all of the above. You know, it's funny when back in my Sun Life, back in my earlier days, I had a product. I worked for Sun Life, and let me just backtrack for a minute because I told you I started out at Phoenix Home Life, and then I'll go through a progression. From there, we went through a series of mergers and acquisitions. I stayed in the same building, but I like to joke that we were on the first floor, and out to the left we had where our signage was that said Phoenix Home Life. You would see people sizing up the sign, and we're like, oh, I wonder what's going on. They must be selling us. And sure enough, we were sold to GE Capital. And that went on for a few years. And then with the GE Capital, I went more from a sales relationship into a marketing. And same thing, some people were looking at the sign, and then we were spun off into Genworth Financial. And then from Genworth Financial, ultimately we were sold to Sun Life Financial. Never once did I change buildings. They just kept changing the sign outside. But the marketing, no, really, because it depends on what your product portfolio looks like or doesn't look like. Sun Life had some name recognition. Certainly Genworth Financial did not. They were trying to get off of or work on the back of GE Capital, right? You really don't need to market a name that has GE in it, at least back then. Right now, GE has some serious headwinds. But back then, if you said, you know, my product is GE Capital, all ears were open and listening to you. So our challenges really just depends. With Manhattan, I think we face the challenge sometimes of, depending on the channel we're in, just getting people are familiar with the name Manhattan. Sometimes it's because Manhattan has a nice panache to it, right? People recognize Manhattan, but they got to get a little bit deeper into the product. And so our job really is to promote our product portfolio. I think one of the strengths of Manhattan is something that we have that I never really had in any of my other stops along the way, which was a vast portfolio. And I'll get into it as we go a little bit deeper. But you know, we have an annuity channel. We have a voluntary benefits channel that we bought from Humana a couple years ago. We have a worksites channel. We have a MedSup channel. And then we also have a very robust individual channel. Dan, you mentioned earlier Affordable Choice, which is available on an individual market, but so too are a bunch of our other products, which I'll talk about as we go. So the marketing challenges, it kind of changes daily, weekly, monthly, annually, just to what we want to go. One of our challenges recently when we acquired the voluntary benefits segment from Humana was because Humana was slowly backing out of it, the brokerage community was a little bit disengaged. So from the employees that we acquired, when we acquired a great group of employees from Humana, was just to help get them prepared to re-engage their brokerage community about what we were doing to enhance the products on that side, but also to make sure that they understood what the value proposition that Manhattan could bring them that perhaps they couldn't get at Humana. I've worked for big corporations, Sun Life being a big one, GE Capital being another enormous one. But really what Manhattan, what we're able to do, and I think we thrive at it, is we are flexible. We can turn on a dime, whether it's product filings, whether it's just really anything that we need to do. And it starts with our chairman, David Harris. We're privately held. When I first met with David, he had tried to acquire a division that I was working for with Sun Life. And it came real close to going through, but at the very last minute, it fell through. So I called him up and said, I'm sorry, it fell through, but I'd like to come out to talk to you. And so I sat with him in his office in Houston. I said, well, tell me about your product development. He's like, what do you mean? Mm-hmm. I'm like, well, you know, where I'm used to is you got to run it by your boss, and it goes to a committee, and then that goes to another committee. And then if you're at Sun Life, it goes up to Toronto. And 6 months or 9 months or a year later, now maybe you're at least talking about developing that product. David's like, we don't have that. Our product development committee would be me and you and Dan George, our president. And we'll decide over a lunch if we're going to do it or not. And that was in the interview process, and I was curious to see if it would play out that way, and it really does. We talk about products all the time, and David, for the most part, is a thumbs up. I'm trying to think. He said that he'd like to wait on a couple products here and then, but typically he's pro product, and he gives us the go. And We've recently, about 5-6 months ago, brought in a product line management team. There's 5 or 6 individuals that are on that team. And we've got a lot of products that are in the product timeline that you will see as we go through the year. You know, we announced a very small minor enhancement, but it's a big impact on affordable choice. That was increasing our doctor's office visits from 4 to 10. We've got some more what I call phase 2 affordable choice enhancements coming down. But we also have some new products that we're working on. So it's an exciting time for me at Manhattan Life. And, you know, we've grown every year. When I started out, we had about 300 employees. And now through acquisition, we acquired the annuity shop up in Spokane. We're at about 550 to 600 employees. So, you know, it's just really a great environment.
I want to get into the details of the affordable stuff, but before we do, you talk about pivoting on a dime, but you guys are really like taking on those headwinds. If people don't know this, but you guys were on the forefront of this whole indemnity stuff. If it wasn't for you guys, we wouldn't be making the kind of money that we're making selling these alternatives to Obamacare. So tell us the story and the history about that.
Yeah, sure. And I appreciate you bringing it up, you know, because you guys both know, when I think you've seen me do presentations, I always mention this, and I don't apologize for it, because you're right. If anybody who's watching this today or would watch a recording of it, if they're selling a fixed indemnity product, they're able to sell it because of Manhattan Life, and more specifically because of David Harris. And what that is, it goes back to a mandate that Health and Human Services brought out in about 2015. Time flies, Carlos, you know, so may have been even 2014. And that mandate basically said, in order for a consumer to buy a fixed indemnity product or limited benefit plan, they had to attest, and that was the key word, they had to attest that they had either major medical through their employer, or that they had Obamacare plan. So if you have major medical, or if you have Obamacare, chances are you're really not in the market for a limited benefit supplemental plan. There's certainly a niche for that, but so what they were trying to do obviously was steerage to Obamacare. And when that came out, we were concerned. There was a large company that was, I call them, they were the gorilla in the limited benefit space at that time. They pulled out overnight. That was Assurant. Right? We all remember Assurant. Great company, good product.
Access plans.
For every policy we sold, they probably sold 50 of them. But they got out of the market overnight. And we certainly understand why, because it appeared to be a death knell for that particular market, for that space. And so we weren't exactly sure what to do. Now, I will say that's one of the benefits, and we had this conversation as a senior management, which was, thank goodness we're not solely reliant on affordable choice, because if we were, you know, we would be in having some serious conversations about what to do. But we were strategic, we were diverse, very product diverse, but it was still a matter of affordable choice is a great product for us. It's been a profitable product for us. But we thought some others who were a little bit bigger than us would challenge that HS, Health and Human Services ruling. But time went on and nobody did. We went to lunch one time. David, our chairman, he really likes to conduct his business over a Tuesday lunch. It's the CFO, it's the president, it's myself, it's our treasurer and our chief operations officer, and then David. And we have lunch, and if you have a topic, that's where you discuss it. So he said, okay, here's what we're going to do. We're going to sue the government.
Easy.
Yeah. So now I'm thinking, I didn't articulate it. You know, I mentioned my boss earlier, Joel Sanders, who said this is all about relationships. One time in an annual review, he said, hey, you're a hard worker, you're passionate, but sometimes you're too passionate. Sometimes you probably open your mouth maybe when you should. So, but at this lunch with David Harris, when he said that, I wanted to open my mouth, which was to say, you've got to be kidding me. But I didn't.
Be effing kidding me.
I was thinking it, but I didn't want to say. because I see the little recording button on up there. But it's like, and I mean, I was a little bit flabbergasted because there were several challenges. A couple of them went as high as the Supreme Court and were sent back down. And there were that Obamacare and HHS rulings were getting challenged left and right, but nothing was working. So we talked about it, and David said, basically the question came to him: why would you do this? Why would we do that? And his comment was very succinct, but I think it speaks to the heart of the company. It's certainly the heart of the man. And, there's the old saying, the fish rots from the head or it thrives. But it speaks of David and it speaks of the company. And his answer was very succinct. He said, it's the right thing to do for the agents and it's the right thing to do for the consumers, because these limited benefit plans are very valuable, right? They've got a great market. He said it's the right thing to do. So we challenged it. We hired a law firm that was based out of Washington, D.C. Sidley and Lewis was their name. We got very fortunate. Two of the lawyers that were on the case actually came out of being the legal team from Health and Human Services. They had worked for HHS previously. So they knew all the inner workings of when to file things and when not to. So we filed the first suit in the District of Columbia. And their strategy, which I thought was funny, we joke about state workers, federal workers. They said, we're going to file it the week of Thanksgiving on a Monday because most of them will be planning on taking the week off.
Yes. And
now they're going to have to scramble. So he said, we'll immediately get their attention. And they did. So that went to court. Our lawyer, John McGettigan, who's from Houston, and the two guys went into the courtroom. And we felt that luck was on our side when they went in. The judge we're based in Houston, Texas. The judge had a University of Texas Longhorn coffee cup sitting right on his bench. So that was a good sign. And we won that. Health and Human Services had 60 days to appeal the case, which they did about day 55 or so at the last second. And then that went to a 3-judge panel. We were a little bit nervous about that because we thought, sometimes you hate to think that politics doesn't get in the way of the law, but it does. So we had on the 3-judge panel, we had 2 Democrats and a Republican, and all 3 of them read the transcripts of the case and all voted in our favor, unanimous decision. And that day, when that unanimous decision came down, that opened the fixed indemnity market back up to not just us. And I really wish it would have been just Manhattan, right? We'd have a monopoly, but we don't. But competition is a good thing, and it opened up the market. So to your point, Carlos, you guys are selling fixed indemnity. You're making good money at it, selling good products, valuable coverage. It's because of that lawsuit. There's no other reason why this marketplace is open other than David Harris deciding that he was going to do the right thing, and lo and behold, it proved to be the right thing.
That's a fantastic story, man. When we think about indemnity products, I don't know what it is. We always think about Manhattan Life first, for some reason. Manhattan Life, and then maybe United Healthcare or something like that. But it's always been Manhattan Life, and it was because of what you guys did for us. But anyways, tell us more about the affordable choice product. Why is that the big 900-pound gorilla in the indemnity space?
Let me see if I can go into a screen share without.
As you're doing that, I want to make a comment quick too. One of the things that I've appreciated about the relationship that we've had over these years, and the relationship with Manhattan Life and with you, is that you are a true spokesperson for that. For the image that Manhattan is consistently trying to promote out there. You guys are always open to the field. You do one of the best jobs of making sure that you stay connected to the individuals that are out here actually trying to do the best they can to service their clients. And there's never been a time that there wasn't, when there was an opportunity where there were suggestions that came through, that you did not take that into audience and take those into consideration. And we've had the plans adjust based on the fact that Manhattan was generous enough to give us an audience with you. I remember that. We had a panel that you invited down to Texas.
Right.
Yes, of some of the top sellers are top sellers in for HST, and it turned into such an incredible experience, and the adjustments that were made for those plans then for us just helped us increase sales all the way around. So I mean, I just want to say thank you for that too, but I appreciate the fact that this is your character, this is who you are, and Manhattan's super fortunate, but it seems like it's an amazing fit. The position that you hold with a company that is matches up with your personal characteristics, right? So
yeah, thank you. Thank you. I appreciate it. It's
and the new logo is fantastic, by the way.
Oh, you like that?
Yeah.
I love it. I love it too.
Yeah.
So you can see on the screen now, map of the U.S.
Yep.
Yeah, okay. So that's just here's kind of where we're at, maybe a footprint wise. You'll see the 2 stars headquarters in Houston, and because it's Manhattan Life, when we acquired the Manhattan Life charter in 1980, and we've maintained a very small office out there. And then we have administrative offices in Louisville and Green Bay and Spokane. That's the annuity shop. And then a variety of regional sales offices and wholesaling channels out there. And then, of course, we could fill pretty much this whole thing in with agencies throughout the U.S. If we went that, but then you wouldn't be able to see the U.S. So a pretty wide footprint. I mentioned earlier the different channels we're in, so I won't spend a whole lot of time on this other than, when one channel, for whatever reason, has tough times, it's good to have 3 other robust channels that kind of pick you up. And I'll be honest with you, we're kind of seeing that right now in 2 areas. Annuity sales are tough, right, with interest rates where they're at. We had a great first quarter, but now it's a little challenging. And then Medicare supplement, our rates where we're at are getting a little bit stale, but we're doing some rate work right now, and we are poised to be very strong when we get to the 3rd, 4th quarter for the med sup side. And then, Carlos, to your point, really our bread and butter is the affordable choice. We started out with two plan designs, went with 2 plan designs for 7 or 8 years, I guess it was. And then a year and a half or so ago, we came up with 2 additional plan designs. That was the Elite Plus and it was the Classic. That you'll see the Elite Plus has a daily room benefit of $5,000. And that came out of the meeting that Dan mentioned that was in Houston with about a dozen of the agents sitting around the table giving us input on what we should do. So it's always been, a very strong plan. But then when we added Elite Plus, I wasn't quite sure, to be honest with you. I thought, man, a $5,000 daily room benefit, what will the price point be? But we're seeing about 20 to 22% of our sales come in on the Elite Plus, which is great. You'll see what we added. On the left was the old brochure, the doctor's office visit, $100 for either 4 days. The Elite Series had 4 days, and the Classic had 3 days. And really, that was probably the biggest noise that we would get. Just not enough doctor's office visits. And, I'll be honest with you, sometimes, we talk about sports a lot. And one of the things that coaches do is self-scout, right? You scout other teams, but you also scout your own team to try to figure out where you've got a little bit of weakness. And we knew we were weak here, but when I talked earlier about being agile and the ability to move on a dime, we didn't move as quick in the doctor's office visits that we should have. And that really just kind of came from self-scouting. It wasn't because we didn't want to do it. It was just, you get involved in something else or some other product development, and it's one of those things, we'll get to it. So it was long overdue, frankly, and we're glad. We've just recently launched these additional office visits earlier this year. So that's good. The other thing that I'll talk about, we added a cancer benefit, either $2,000 on the Elite Series or $1,000. That's over 40 days. So it provides potentially up to $80,000, right? If you had a $2,000 benefit and you had over the course of a year, 40 days of treatment, that's an $80,000 benefit for the Elite, or $40,000. So that was a new benefit as well. And then we changed our surgical schedule to be not a flat amount, but to be either 3 times, 2.5 times, or 2 times of the Medicare fee schedule. So if you have, we'll go Classic Plus just because that's an easy one. If you got a $1,000 surgery and you've got Classic Plus, that's 2 times you're going to get a $2,000 if it was $1,000 on the Medicare fee schedule. So that's been well received. And then, you know, what we see, there's a few products out in the market that have something similar. Building benefit rider, your daily room benefit will enhance as you get into years 2, 3, 4, and 5. So that's really the heart of it. But, you know, I think what's most attractive to affordable choice, and I'm going to get into this as we go through the slides, is it's appropriately named. It really is affordable. We do price comparisons to our competitors, as I'm sure they do to us. And I think where we're at, particularly as you get into the upper age bands, is that there's money that's left on the table to add additional products and to cross-sell products. And one of our other flagship products is a Cancer Care Plus product and a dental vision hearing. I think if you look at, and I'll go through some numbers here, but when you look at affordable choice compared to some other plans that might be out there, and if you want to add cancer, because an affordable choice and a Cancer Care Plus, just those 2 products, that's some pretty robust coverage. But add in dental vision hearing, or add in accident, or add in out of pocket, which is a gap plan, which has some first day coverage, some gap coverage. Now you're starting to build a great plan. So really what affordable choice does, apart from having some, a very good benefit design, plan design across multiple price points, is it's very affordable and allows agents to get into talking about and adding other products. And along those lines, you know, a year ago we added or debuted a new enrollment platform. We call it Manhattan Direct 2.0. It's an Amazon shopping cart. Thank you, Carlos.
Yeah, I was just about to say that. You got to talk about that platform.
Yeah, that's point and click, and you can, you know, somebody says, nah, I didn't want to go across $500. Let's back out the cancer. Back it out. It's just real easy. One-stop shopping was our objective, and I think we accomplished that. So
I want to say thanks, because for us agents, the inpatient hospitalization is always like the first number we look at, right? And if we can offer a client a $5,000 inpatient hospitalization, that can replace the short-term plans that might cost them an arm and a leg. You know, they want, just in case the stuff hits the fan. Okay, we got this plan that's gonna pay $5,000 a day, which is above the normal rate, right? What's the normal rate? Like $3,600 or somewhere right around there. We're gonna get $5,000. We're gonna be good, right? And and sometimes when we're selling these short-term plans, a lot of people want to know what they're going to get when they go to an office visit, or they don't even have office visit benefits on their short-term plan. So we have that solution with the affordable choice, and it's so easy to enroll with the new platform. All that stuff I was thinking about when you were saying this stuff. We get $5,000 benefit. We get the doctor's visits we can add to a short-term plan, and we have this easy enrollment platform that we can do it all from. It's fantastic, man.
And you know, you just said something that I really want to make sure that's heard, which was add this to the short-term plan, right? Because the short-term is short-term. Yeah. And sometimes I'll talk to agents, they're like, well, I either go short-term or I go fixed indemnity. It's like, well, wait. You know, we all know, most of us all know and love Galen Hendricks, and she preaches that day in, day out. And she's right. This is a great complement to a short-term plan, if in fact agents feel that they need to go that way. But
on the other hand, short-term is a great complement to Manhattan Life, because
exactly
they both have their pros and cons, right? We have a short-term plan that acts more like insurance. Like for all the agents hearing this is the way we present them, right? We go, the best combo is to do them both, because we got a short-term plan that's going to act like insurance, and it has a stop loss, and you know, the stuff hits the fan, at least we have a, you know, out of pocket.
Sure.
But that thing's going to terminate. It's going to abruptly end at a certain period of time, and that's going to leave us out in the cold. We don't want that. we have to add on a fixed benefit product, an indemnity plan that's permanent, that no one's ever going to take away from us. So we're going to get the best of both worlds, but we're going to give them a robust $5,000 inpatient hospitalization plan. And then we're going to give them a high deductible, more affordable short-term plan to limit our financial exposure. That's usually how we do things.
Yeah, it makes total sense. Makes total sense. And then the other thing with the doctor's offices that we added was, if you don't use them, you don't lose them. You can roll over 5 visits to your next plan year. So
I did not know that. So if you have leftover office visits, they're going to roll over into the next year.
They're going to roll over a maximum of 5. So if I had 10 and I didn't go to the doctor, or I went once, I can roll over. I'll add 5 more.
I see. Okay, fantastic.
Yeah. So we're pleased with that.
Does that continue every year, Todd?
Sorry?
Does that continue every year? Like you have 15 visits the next year, like we're going to roll. Okay. So it's always going to be a maximum of 5 every year.
That's correct. That's
okay.
correct.
Thank you.
Yeah. Okay. So now I did this presentation not too long ago, and I came up with a couple of quotes. If a window of opportunity appears, don't pull down the shade. Tom Peters. And opportunities are like sunrises. If you wait too long, you miss them, right? And I think we've got some opportunity here, and I want to talk about that now. Now, I'm going to show you some price comparison. It's against Company X. It's using our 3,000 per day plan. I'll go through several slides like this, kind of hopefully rapid fire. But you look, so down in these younger age bands, Company X is a little bit more competitive than we are. But what we find really with where the majority of our sales are when you get into that 40 and up, okay? Even the 50 to 54 and on up. That's where we see the majority of our sales coming. So when you look at where we are for a 50-year-old, and this would be male or female, the other thing I would say, we don't have male or female rates, nor do we have smoker, non-smoker rates. They're unisex and smoker, non-smoker, it's all the same. Okay, so that's why you'll see that premium flat line at the 50 to age band. But where those parentheses are, I said this represents opportunity, because in the 50 to 54, comparing Company X to Manhattan Life, I've got $75 that if I sell Manhattan Life, I've got $75 left in my consumer's wallet that they can spend on additional products. So I might suggest that they spend it on a Cancer Care Plus. Now they've got affordable choice. Maybe they said, or maybe they wouldn't qualify for cancer. If they had cancer 5 years ago, you're not going to qualify for cancer. There is a look back. But maybe they want to add dental, vision, hearing, and a gap product. They can do that for $80, or an accident product, right? So when you get up to the higher age band, up to the 60-year-old or the 55-year-old, I'm sorry, I've got $169 left to play with. And that's that's for an individual male non-smoker. Now I'll go a couple other examples. Let's look at an individual female non-smoker. That money left over to bundle is $86 and $165. That's for the 49-year-old and a 55-year-old. Okay. Again, this is a $3,000 plan. Company X, we also looking at their fixed indemnity plan that has a $3,000 daily room benefit. So what I'm trying to emphasize here is what I mentioned earlier was the affordability of it, but also the ability to put in some great additional coverage. And again, I'm a huge fan of Cancer Care Plus. I have a slide on, and I'll explain why here in a little bit. But these are extremely competitive rates, and I think, we also know that I think there's the saying that, right? If you sell a individual one product, they're a buyer or something like that, and if you sell them more than 2, they're a customer, right? Or something like that. So, but more importantly, you're selling them other coverage. Let's go on to a couple more individual. I want to show.
So who's Company X?
Well, you probably know.
I think I do.
Yeah. The reason I do Company X, to be honest, it gives you, there's certain rules that we follow, right? If you name a company, you got to put certain disclosures. But I guess I could do this. I flew a airline today.
Okay.
That has a similar name as the first word of our country.
Okay. We got it. 100%.
Got it. Individual and spouse non-smoker, kind of the same thing. Let's look at what we have left over to bundle in that 45 to 49 age band. $108. Once again, Cancer Care Plus. There's only so much wallet share. So people, if they're buying Company X at $800 for that 55-year-old, I'm not sure how much wallet share there is to add on any additional products, but probably not much. And just a few more examples that I wanted to show you, because when you get into the smoker, now I'm certainly not asking for just all your smoker business, but I'm really not sure why, and certainly don't want to offend anybody who would be on this call, but if you're selling Company X and you're selling that smoker rate to either the male or the female, I'm not sure why you would charge somebody an additional, or ask somebody to pay an additional $400 for what I think is, when you compare plans. Yes, we've got some strengths. Company X, and not just Company X, there's other companies that are out there. They have some strengths, but for the most part, all things come out in the wash. Why send somebody, or why sell somebody something that's $400 more? That one's a little perplexing to me. And then this one, here's the individual smoker. I don't have the metrics on it, but we can look at it visually. Our plan is going to be about $290 versus a $800 plan for females. So again, affordable choice, but it's also going to allow you to add on other products. So let's get into talking a little bit about other products. I do want to say, when we added
to your point, that the extra change, the extra savings allows us to sell them another product. And the more products we sell to a client, the more they are lifers. They're going to be our clients, right? I'm a big proponent of, we're working in the Medicare space a lot, and the cancer policy is always something that we need to offer our clients. And if you guys are listening to this, you guys got to consider Manhattan Life's cancer care plan.
Yeah, I'll get to. So this is where we added the doctor's office visit. Those green states are where we have those doctor's office visits approved. So we're making good headway. Mm-hmm. I was thrilled. Texas, not most, but we do sell a lot of affordable choice business in Texas, and Texas just got approved last week. It's not yet up on the enrollment platform because it was just approved. Now our other. The other older version of affordable choice was approved in Texas. This is just the doctor's office visit, but it's available now. So you'll see that on our platform coming up. I will talk briefly in the third quarter. We are working on phase 2 enhancements. We'll have some exciting news around our outpatient medical benefits. We're putting the outpatient medical benefits in the garage, working on those. And I think what you guys see come out in the third quarter, you're going to very much like it. Let me move on now to the Cancer Care Plus. And Carlos, to your point, cancer products that are out there, a lot of them are the same. They have a cancer screening. They have a first occurrence, a lump sum, one-time benefit. They've got lodging and transportation and experimental treatment and all of that stuff. But the majority of expenses for cancer are going to come down in what's at the bottom of the screen: radiation, chemotherapy, and immunotherapy. And what I see out there a lot is that carriers have very little, if any, immunotherapy coverage. Immunotherapy is up and coming treatment regimen for cancer. It's one of those things you Google, right? Or even read the paper. I mean, I'm reading about immunotherapy just about every other day, it seems like, because it's really an emerging treatment. It's been around for a long time, but it's catching fire. So a lot of carriers don't have, or they have a limited benefit. So let's just say an example might be, if you look at our plan B, we have a $5,000 per month. That's not capped. There's no limit to it, meaning annual or lifetime. But there's the month. Whereas another carrier, if they covered immunotherapy, it might be 25% of the benefit. We see that a lot. Mm-hmm. Also with radiation and chemotherapy, we see a lot of carriers that do have annual maxes and also lifetime maxes. We don't have that on this product. 70% of your claims, regardless of the company, are going to come in radiation, chemo, and immunotherapy. So if you're selling a cancer product, and you talk about, and we've all done this. If you sell cancer product and you're in a room full of 20 people, everybody does the old sales question, right? If you know somebody that's been impacted by cancer, raise your hand. And if it's 20 people, it seems like 17, 18 hands go up. So just as far as to start talking to people about cancer coverage, a very good product. And then you also see you can add for about $5 an intensive care rider or a critical care rider. So and now let's go back into, but before I get off to or go on to rates, I will emphasize that it's the big difference maker here, where the rubber hits the road, is the radiation chemo benefit. So if anybody out there is listening and selling somebody else's cancer product, I'll have my email information up at the end. I would love to have a conversation. And you might call me up and go, I think company X is stronger. I'd like to hear why, but I don't think that'll be the case. Our products, another good thing, most of our products, some of the agents who are listening probably work in groups, right? Small groups. We have payroll rates and we have individual rates. So this is what we were looking at earlier for $71.65. I added $5 for a rider, so that's why it showed $76.65 on the prior slide. You sell on Plan C, that has $7,500 of radiation and chemo. And we know that you have that money to spend, because instead of selling a higher priced limited benefit plan, you sold them the affordable choice. So that's the Cancer Care Plus. Would highly encourage that you take a look at that. For years, I mentioned that I've been doing this for a long time, and one of the most asked, this is always seems like the annual LIMRA survey, right? What's the annual LIMRA survey? What's the most requested product? Dental. We launched this product now about 5 years ago, and this is our highest selling product by application count. We sell, depends on the time of the year, but I'll tell you, even in this very interesting time that we've all been living through in the last 6 to 8 weeks, we're getting about 650 to 800 of these a week. So there's two plans. There's a $1,000 policy year maximum, and there's a $1,500 policy year maximum. And there's kind of, it's your classic dental. There's preventive, basic, and major services. Preventive would be annual exams, cleaning, and x-rays. There's no waiting period for that, and it pays 60% of usual and customary in year one. Our basic services, it gets into a little deeper, x-rays, fillings, extractions. There's no waiting period there. And then in major services, that's the big stuff, right? The bridges, crowns, root canals. There is a 12-month waiting period there. Pretty standard, I would also say, for the industry.
Not really, because on the major services, standard is right at 50%, and we're getting 80% with DVH over here.
Yeah. Well, I was talking about waiting. I was talking about a waiting period.
Okay.
Yeah.
How is it that in just short 5 years, when somebody asks what is a good dental plan for a Medicare beneficiary, Manhattan Life always pops up? Why? How did you guys get so into at least the Medicare space that what I'm in at the moment? And it's a natural. And when you look at our sales percentage by age bands, and you see the age bands on here, this product is heavily in the Medicare. I think there's a couple reasons, Carlos.
One is it's kind of a natural, right? Seniors, you turn 65. I've had dental coverage all my life. I'm 9 years away from being 65. But then if I retire, now all of a sudden I don't have access to dental coverage unless I had, like I mentioned, one of my former employees, right? The old GE, and they gave you benefits for a lifetime, which most of those don't do it anymore. But so now you need dental coverage. I've been used to going to the dentist at least twice a year. And you see our age bands. We go up to age 85. And this DVH, it's a natural with a Medicare supplement. So I will tell you, I was in a Medicare call center. This is probably now 4 years ago when they were giving us the tour. Someone was on the phone. They were going through their med sup cell. They got toward the end of it, and when they clicked onto the next screen, there was something flashing on their screen that said, "Don't forget to ask about dental vision hearing. Don't forget to ask about dental vision hearing."
Wow.
Yeah, it's a natural, and really, you look at the price points that we have there.
Flash,
why is $1.
That is such a great idea, right? Every time somebody puts in a sale in LeadMaster with HST, it should say, "Listen, did you ask about dental vision and hearing?" That's what.
Yeah. So, and it's just really, it's kind of and we're seeing a lot of it. It's for that med subs buyer. It's really a natural med sup and DVH. It's kind of like hamburger and cheese. They go together.
Let me ask you this. For folks who aren't familiar with Manhattan Life's dental vision and hearing, it's an indemnity product, and some folks are well, is it really like some folks are more used to like, okay, this insurance is going to pay a percentage, and then we're responsible for the rest, right? How are the process? What's the claims process with Manhattan Life? Does the client or the consumer have to pay for the benefits up front first, and then send in the paperwork, or does Manhattan Life coordinate the benefits? Like what?
Yeah, right now the client pays for it up front. In fact, most of our chat traffic is providers verifying benefits. So that the provider will verify benefits and they pay up front and submit the claim, and then we reimburse to the policyholder. We are looking, and probably not this year, but we are looking to streamline that, working with the providers. But that's somewhat like moving a mountain. But we do, I mean, at the end of the day, regardless of it's dental vision hearing, affordable choice, cancer care plus, accident, annuities, med sup, whatever line we're in, we've got to make sure that our focus is on make it as simple as possible for the end user, the consumer.
Does the consumer have the ability to upload documents on a portal?
Yeah. They can do that through the customer portal, and that's for any claims. All claims can be uploaded.
Yep. Instead of having to mail stuff in like some carriers. Stuff in, they can upload it to.
Yeah, and we've been trying to marshal efforts around that. That speeds up the claim, the payment of the claim, typically by about 7 to 10 days. By the time someone drops it in the mail in Denver and it gets to Houston and gets routed, and we archive the claim and then adjudicate it and drop a check in the mail. If we can get it to upload. And in fact, one of the things that we're working on is a webinar for, I don't think it'll be ready in May, but it's around some of the statistics that we have around uploading claims and how to make that easier and how we can help agents make it easier for their clients to do that.
Have you guys ever thought about having do providers have issues with the chats or understanding how these claims are processed? Like us as insurance agents, it's a little difficult to understand, but the providers would probably be a mess. Like how do I get paid on this thing? What do I have to do? Blah, blah, blah. Like, you guys ever do the trainings for the providers or no?
No, actually we haven't that I'm aware of. Now I will say that because that kind of gets into the operations side of things, but I think I'd be aware of it. But you bring up a good point. I think, that's the inflection point, right? The providers. Yeah. So it's a good idea. I'm going to make a note here to do a little bit of homework on that. But certainly, if that's something that will make it easier ultimately on the consumer, then yeah, we want to look into that.
Or maybe just like a little like flyer or handout that the consumer can hand over to the dentist, just to be aware that just so the provider can know what to expect. Here, there's a feature that you can talk and you can verify benefits. It's that easy. And this is how it works.
Mm-hmm. Yeah. Okay. Let me just real quickly, I won't spend much time on this here, but I did have in the bundle approach accident. We do have a traditional accident plan, 1 or 2 units. You could see that the rates down here went to monthly for employee and spouse. That was from the earlier bundled approach that we saw, $32. So again, now we're looking at accident, cancer. And then the last product I really want to talk about briefly, it's an out-of-pocket, it's a gap, as a daily, and we see a lot of agents sell this in addition to affordable choice or even other products. So it has a daily room benefit, but then it also has that one-time admission, either of $2,500, $5,000, or $6,350. It also comes with 2 doctor's office visits. So you layer this in with an affordable choice or any other products, then you've got additional coverage. Let me just real quickly show you. And that individual spouse over here on the left-hand side. So if I didn't go for my optional benefits, but I picked the $100 a day and call it, I don't know, let's go with just the $2,500 a day. There's the $38. So again, another opportunity to bundle coverage and bundle it with affordable choice, because that's kind of the linchpin of our offering, and build up that coverage with these other products that we talked about.
Quickly, the out-of-pocket protection plan.
Yes, sir.
That plan is, you are hospitalized for whatever reason, you get a lump sum check. Is that how it works?
It does. Yep. You get a lump sum check. If you're in, let's just say you're in for 3 days. So you get $300 a day for your daily room benefit. Now, that might not sound like much, but guess what? Carlos, my agent, also sold me the Elite, so I have $3,000 per day with that plan. So there's $9,000, so I'm getting $9,300 for my 3-day hospitalization. Wow. And then this one-time benefit, depending on if we had $2,500 for my example. So another way to round out that hospitalization coverage.
Todd, I appreciate you getting into the details with these plans. I want people to understand how easy it is to write these policies. Does the client have to electronically sign their application?
No, thank you for bringing that up.
Yeah. My theory is this: the less friction there is in the sales process, the more sales we're going to make. And I think you guys done a fantastic job of eliminating that friction.
Yep. What we require on our electronic platform is mother's maiden name. So my mother's maiden name is Smith. If Carlos were talking to me online and taking me through the enrollment, and he bundled not only affordable choice, but Cancer Care Plus and out of pocket, he's going to get to the point where he asks my mother's maiden name, which is Smith, and that's all. You don't have to send me anything that I then have to verify it. You've written down Smith. It uploads into our system, and we'll see that Hayden's mother's maiden name was Smith. So you're right. When we do get very good feedback about that in our electronic platform.
Maybe you can't say it, but I'll say it. With National General and United Healthcare, there's an electronic signature process can just like hinder the whole thing. So I totally appreciate the Manhattan Life platform allowing us to, like I said, eliminate that friction. I think that's fantastic.
And again, so think of, I've talked a lot here, and sometimes when I do these webinars, I'll focus on a product or two, but I really wanted to make sure that people are aware that, if I'm talking about affordable choice and I'm in Manhattan Direct 2.0, and now I'm in Amazon, right? So I do want to add cancer, and it's like that. And I do want to add accident, it's like that. And they're going to be on the right-hand side of your screen. You can add more, you can take more away, but it really is a streamlined enrollment experience. And I think, and we're getting feedback. We get feedback almost weekly. Agents absolutely love it. I had an HST agent send me an email. I don't know, it's probably a month ago now. He said, man, I fought it and I fought it and I fought it. Finally, I tried it and I love it and I should have been using it since you launched it. So
Yeah.
it's a good platform.
Yeah, we gotta do some training on that platform. Maybe a quick 5-10 minute and post it on the hub somewhere. But
Sure.
and Antonio Lugo asked a question: are inpatient hospital confinement can be compared to offering ICU care? Does that make sense? Our inpatient hospital confinement can be compared to offering.
Well, I think what he's saying. I think I understand what he's saying. If there's no ICU benefit, there's, in addition to the daily room benefit, there's that first admission benefit, which can help cover the ICU. I think that's what Tony might be asking.
Okay. What do you got up on the, what's all those vacation spots?
Hey, wait, before you get to that real quick, I do want to ask a question about list bill options.
Mm-hmm.
This is a good option for companies that are looking for benefits that aren't potentially getting major medical for their employees. You do have list bill option, and it's the same enrollment platform. Easy process.
Yep, we have a list bill for every product, and either the payroll rates, and there's some of the others that I haven't been here, but Dan, thanks for bringing that up. We do have list bill options, and we do quite a bit of it actually.
Great.
Carlos, one of the things that this is a different year as it comes to our Chairman's Club and President's Club. We pride ourselves on our Chairman's Club's trip, our President's Club trip. Last year we went to Vienna and Park City, Utah. This year we were scheduled to go to Stockholm, Sweden, and Cabo San Lucas. Because of the COVID-19, unfortunately, we had to cancel. But we did have some nice contingency plans for Chairman's Club qualifiers and President's Club. We've sent them a nice contingency check in addition to some online awards shopping that they can do. And then so next year our hope is that we just like Groundhog Day, we'll go back to Stockholm next year, and also Cabo San Lucas. So that qualification started this month, May 1st. It ends April 30th. So what agents sell of Manhattan, it all goes toward either the President's Club trip or the Chairman's Club. Just to real quickly hit on it, takes not a whole lot because we do like to entertain our agents at these clubs. It takes $100,000 of paid premium to qualify for the President's Club. And if you do the math with affordable choice and average annual premium of $2,500, that's not a whole lot that you have to sell to qualify. And then it's $140,000 for Chairman's Club. Now, what I will say, those were last year's qualifying numbers. We might adjust those a little bit. We might adjust them downward because it's been a little bit more of a challenging year, right? People have lost some sales windows. Those numbers might adjust a little bit, but they're always great trips. Dan can attest to how great these trips are.
I've heard all about them, and I'm jealous, but I'll get there one day.
It's a tough act to follow. I will say that. It's a very tough act to follow. Once you experience that, very few come into comparison to their trips.
Yeah. And then there's my contact information, and maybe Tony or anybody else who had that question, has a question, feel free to email me. The marketing mail at manhattanlife.com. That's another alternative. It will get to me eventually, but you should use my direct email. And Carlos, I just threw in a hub logo because I was messing around.
That's fantastic, and I love it. It looks great. I appreciate that. So for anybody that, is not selling Manhattan Life, you need to really consider it, and, reach out to me if you need to get contract, or if you don't want to, me to get credit for the policy, that's perfectly okay. Reach out to Todd directly and figure out how you can contract it with them directly. Todd, we're at the end of this. We've eaten up an hour of your time, and I know, it's going to cost Dan a lot of money. But tell me, you mentioned that you are on 31 years of marriage.
Yeah.
What's the secret, man? There's got to be some secret to 31 years. How do you do it?
I think my wife is a very patient lady.
Yeah.
Which she is. She's retired, semi-retired now. She was a school teacher for years, kindergarten, first grade, and second grade. So I think when she came home every night, to her, it was just like dealing with a kindergartner or a first grader or second grader. She knew how to handle me.
Yeah. So treat him like a kid. That's all.
Yeah. No, I don't know. Just, I don't know. That's a very good question. Communication, probably. There were probably times earlier in my marriage where I probably wasn't a very good communicator, and that creates problems. That's kind of like even in day-to-day business, right? Communication is fundamental, probably to business and certainly also to marriage. So that's going to be my answer, communication.
That's fantastic. One last question I forget. Where do you get your shoes from? Where do you buy your shoes from, and what are you wearing?
Today I was wearing some new Allbird running shoes.
If anybody's met Todd at any of the events, across the industry, his shoes are always on point. Yeah. But you gotta tell me, are you getting them online somewhere? There's like some secret facility making your
usually online. I'll put a plug for Cole Haan here. I'm a big fan of Cole Haan.
I've never heard of them. Is this a shoe company online somewhere, Cole Haan?
Yeah, COLEHAHN. They're extremely comfortable shoes. And then, I don't know, I guess it's kind of my vice, an occasional, Dan will tell you, he knows my vice. It's occasional glass of red wine and shoes.
There you go. I hope my wife doesn't listen to this because I'd be broke. But yeah, I appreciate all your help, everything you've done for us, Todd, and I appreciate some time.
Thanks for having me. I enjoyed it.
Yeah, thank you. And we'll see you. We'll see you on some trip somewhere around the world.
That's right. And everybody be safe.
All right. We'll talk to you.
Thank you.
Thanks, y'all.